Hello everybody, welcome to the daily analysis of the Indian stock markets for 12th April 2018. Important points to note from yesterday's trading sessions. Markets were largely range bound yesterday. A hanging man type pattern candle was formed on the daily charts. We will see more about what the hanging man type pattern candle is. This pattern mainly occurs at the top of the bullish trend and indicates that the bulls are losing momentum and a potential trend reversal. The foreign institutional investors bought about 362 crores worth of shares. The domestic investors bought about 111.82 crores worth of shares. For Nifty, it opened at 10,428, closed at 10,417, up by 15 points from a previous day close of 10,402. Intraday high of 10,428 and a low of 10,355. Support levels for Nifty at this point of time is expected at 10,370 and 10,325. Resistance is at 10,445 and 10,470. The 50-day simple moving average for Nifty is about 10,425. If Nifty breaks this, then Nifty might hold on to that range and possibly show signs of moving up further. Okay, let's have a quick look at the charts. If we look at the charts, you may see that day before yesterday there was a doji pattern formed, and yesterday's trading session it forms a hanging man type pattern candle. What hanging man type is that the opening and the high of a particular day remains the same, which is 10,428.15, and after that Nifty went and hit the intraday low of 10,355. and it recovered and it came back and it closed at 10,417, more than day before yesterday's previous close, which was 10,402. Nifty actually moved up by about 15 points, but what we should notice is that the opening and the high remains the same, and Nifty hit a low of roughly about 70 points and it recovered. So this basically indicates that the bulls are losing momentum, and they are though they have lost momentum and the markets went down, investors still start buying and then able to push the index back to 10,417. So the bulls have lost momentum, and at the same time this also could be a sign that the trend is reversing from a bullish trend into a bearish trend as well. If you can notice this SMA simple moving average curve, a 50-day SMA simple moving average curve, the 50-day range for yesterday's trading data is 10,425. If Nifty breaks this number and then stays above, then it is a sign that Nifty will be able to hold on to this range. But if not, then either Nifty might be volatile and may also have a trend reversal at this point. Let's have a quick look at the active calls and puts. The active calls for yesterday are 10,500, which has an open interest of 43.83 lakhs. The other notable active interest in calls is that the 10,600 strike price range and 11,000. 11,000, though it has a higher number, the value of this is much lesser. The concentration therefore is centered around 10,400, 500 and 600. So the key resistance for the market should be considered at the 10,500 range. When we have a look at the puts here, the 10,300 put has an open interest of 43.54 lakhs, and the 10,200 put has 41.433 lakhs. So and the 10,000 put also has 45.74 lakhs. So what this indicates is that any support for the market should lie around these ranges. But largely the concentration is around 10,300 and 10,400. So the markets, we believe that should be within this range, as the concentration of puts and the calls is around 10,300, 400, 500 and 600. Let's have a quick look at the world markets. Due to concerns about what is going on Syria and interest rate discussions happening, the American markets were a bit down as of yesterday. The Dow Jones lost about close to 0.91%, and the S&P index also lost about 0.55%. The Canadian markets also marginally went down. Otherwise, the North American markets, the American markets seems like range bound. The European markets also have been a little on the negative side as of yesterday. This is predominantly due to the trade wars and the concerns over Syria and the US likely to retaliate by threats of bombing Syria. So the European markets have been somewhat on the lower side as of yesterday. The Asian markets, if you can notice, not much has changed. Japanese Nikkei has a marginal difference of 0.07%. The Hong Kong index also has largely remained unchanged. The NSE and Mumbai Sensex, they have marginally increased as of yesterday, though there was a downward trend, but the markets were able to catch up and come back. The Singapore Nifty at the time of preparing this report was at 10,439 with a change of 21 points and roughly about 0.21%. So for today, we expect that markets may be range bound and around this range, and if the markets cross about 10,425, it might somewhat hold on to this range. Otherwise, it might see a smaller marginal reversal at this point. So thank you for watching this webcast from Brokerage Free. Invest wisely for a better future, and please be cautious with your trades today. Good luck. Thank you.